Hi, this is Michael Yardney and welcome to my property update. I've just returned from the Gold Coast where we ran Wealth Retreat for 50 of Australia's leading property investors, business people and entrepreneurs. We had a great week and we made some fantastic plans for the year ahead. Please set aside the last weekend of May in your diary for 2010. Maybe you can join us at Wealth Retreat 2010. When I came back to some great news that Australia has escaped the recession, technically or otherwise. And now Wall Street's roaring ahead and our share market is up around a third since its low point in March, and our property markets are recovering. And they're now going to start to rebound. Happy days are here again. Well, actually no, at least not yet. At best, we face a turbulent time for the rest of the year, and at worst, we could still have 2 quarters of negative growth and a technical recession later this year. So what does all this mean for our property markets? Now sure, Australia has avoided one technical definition of a recession, 2 consecutive quarters of negative growth, but let's be honest. If we forget the technical definition, we're in a recession, and we have been for about 6 months. People aren't spending, businesses are closing down, the property markets are flat, and jobs are being lost. So the question has never been whether we're going to drop into recession, but whether we're about to come out of it. Now, while the issue of whether Australia is in a recession is partly a matter of semantics, it does have some real-world significance, particularly for us as property investors. It will stop the run of bad news that we've been bombarded with lately. No more messages that Australia is going to be ruined and that the end is near. This, together with a significant rise in the share market, will support business and consumer confidence, and it will encourage people to start spending and businesses to start taking risks. And that's exactly what the doctor has ordered. So, just so we're clear, a recession is defined when our economy stops growing and has 2 or more consecutive quarters of negative growth. Of course, recessions are part of the normal economic cycle, and most countries have a recession every 7 to 10 years. Australia's been an exception. We haven't had one for 17 years. So let's take a moment to look at what happened over the last few months with the news of an impending recession in Australia. We developed a recession pattern of behaviour, and the average person started to be scared. People were afraid they could lose their jobs or the economy was going to go down the drain, so they stopped spending. They took their bats and balls and they went home. They stopped playing the game. However, one of the foundations of our capitalist economic system is the recycling of money through the system. It works a bit like this. You earn $1 and you go out and buy something, and the shop owner gets the money and he goes out to another shop and spends from somebody else, who again spends the money, and the cycle moves on. The problem is, when the first person stops spending their money, the recycling of money stops and the economy slows down. If you multiply that by hundreds or thousands of people all doing the same thing, then it ends up as a self-fulfilling prophecy. The economy goes into recession because no one's spending. You actually help feed that which you fear the most. That's of course why our government was trying to stimulate our spending with its handouts and fiscal stimulus. Of course, there's much more to our current problems than just lack of spending. The dramatic deterioration of the global financial markets has driven much of the developed world into recession. Okay, so how does this affect you and me as real estate investors? During difficult times like we were experiencing, people were scared of making big financial decisions. They didn't buy new cars, they didn't buy or sell or upgrade their homes, and they held back from investing in properties. And this translated to fewer people buying properties, and of course this usually leads to a fall in property prices. In other parts of the world, this caused a significant drop in value, with prices falling between 10 and 30% in the United States and the United Kingdom. Of course, this hasn't happened in Australia. By and large, property values held up really well during this last little while due to severe shortages of properties, and more recently due to lower interest rates and increased demand from first home buyers. So the news that we're not in recession will be positive for our property markets, because this downturn has all been about confidence. If consumers and businesses become confident about spending and hiring again, then the recovery should be a lot quicker and stronger than most analysts thought possible a month ago. There's still going to be more bad news in the press, and unemployment will rise and more businesses will go bust. So don't be surprised if you hear mixed messages from the media. Sometimes about the green shoots of recovery and other times about our troubles. The fact that we're getting mixed messages usually means we're at a turning point in the cycle. The doom and gloom reports in the media for the last 9 months almost caused Australians to talk themselves into recession. And some celebrity economists who predicted the property values would drop 30% scared many homeowners and property investors, making some of them sell their properties and others hold off making buying decisions. The important thing now is that the commentary and analysis of our economic situation becomes more balanced. While the tough times abroad must be acknowledged and the challenges facing Australia must be accepted, the strong position of our economy must similarly be recognised. The next 6 months will see more pain and more job losses. In some areas things are going to get worse before they get better. And if the share markets and our property markets go up too far too fast, they're just going to be setting themselves up again for the next downturn. But as I've mentioned many times in these market commentaries, the fundamentals for our property markets are sound. Australia is experiencing the biggest migration boom in history, with 253,400 people arriving last year. Australia's overall population grew by 1.9% over the year, the fastest growth in almost 40 years. Yet at the same time, we had a tremendous undersupply of properties, historically low vacancy rates, rising rentals and low interest rates. All this bodes well for our property markets. We all know that the lower end of our property markets are hot, in part due to first homeowners rushing to take advantage of the government handouts. Now there's evidence that the middle sector of our residential markets are also picking up. Home buyers who feel secure in their jobs are taking the opportunity to trade up, and investors are returning to take advantage of low interest rates, low prices and high yields. With little stock of quality properties around and renewed buyer interest, auction clearances are back at 2007 levels. In time, the economy will recover, interest rates will increase, inflation will return, partly due to our government borrowing money and pumping it into the system. And the net effect of this is that investors who park their money in the safety of bank deposits will start looking for a new home for their funds. A safe haven, which is going to be a hedge against inflation. And many are going to turn to well-located residential properties. And then the property markets are going to take off. So now there's a window of opportunity for you. Now, a chance to get in before the property markets start to take off while many people are still nervous and working out what's going on. But you can't just buy any property. You need to have a long-term focus and buy well-located properties with an element of scarcity in areas that outperform the long-term averages and properties to which you can add value. By the way, in changing times like we are now experiencing, no one can help you through the maze quite like the multi-award winning team of independent property specialists at Metropole. And remember, we help homeowners too, not just property investors. We've got no properties to sell, but access to every property on the market. If you want to find out a bit more about what's happening in your local markets and what our research suggests is in store for us, please join us for a free property briefing at our offices in Melbourne, Sydney or Brisbane. Just click on the link below to find out more and reserve your place. And if you haven't purchased your own copy of my new book, Thriving, Not Just Surviving in Changing Times, please do that also by clicking on the link below, read a bit more about it, find out more.